Well and staying safe. It's November Payrolls Day. It's Friday, December the 3rd, and it's all about this big number. Hopefully, this big number that's going to show the continuing tightness of the US jobs number. 550,000 new jobs are expected today. That's a consensus. Big variation again, down to about 200. And sorry, I made a note of it, didn't I? 306,000 all the way up to 880,000 across the two main polls, one from Bloomberg and one from the Reuters Corporation. Obviously the big issue has been this participation rate over the last few months. Obviously, we've got the Omicron situation that's going to sit on the data as we move forward. Obviously, it's too early to have an impact on the current numbers. So this could be sort of peak non-farm payroll data. Because each of the other variants of the SARS virus has had quite significant impacts on, obviously, on demand, on hiring. Obviously, companies don't want to hire if they're if people haven't been vaccinated, they're not going to get hired. But if demand isn't there, so jobs very, very sensitive in the US in particular. So key data today, as ever. Obviously, the unemployment rate has been falling consistently. It's expected to come in at about 4.5% today, much lower than it has been at the beginning of the year. Beginning of the year, it was 6.3%, so it was a 1.8% decline over the course of the year. Last number, obviously, for December for 2021. 531,000 new jobs last month. Again, we obviously had that big surprise month before, so obviously see what occurs later in the next about 5 minutes or so. Data-wise this week throughout the US, it's all been relatively strong, hasn't it? We've had strong consumer sentiment. The consumer board was positive. The private payrolls on Wednesday was beat expectations. That was better than expected. Claims yesterday, again, a new pandemic low, 194,000 last week's were revised down to, and they came in at 222,000 for this week. So again, way below normal economic cycle expectations. So all good stuff, really, as far as the data is concerned. Obviously, Delta variant had a big hit on Q3 output and demand. Obviously, Q4, see how Omicron plays out. But that's going to be something as we go forward. Obviously, we've had a big wobble in the stock market. Stock markets have wobbled quite significantly. We're down about 5% and a bit from highs on the. Let me just find you the USA 500. Where is it there? Let's bring that up. There we go. So this is the daily time from the USA 500. So we're down, 5% and a bit from that that all-time high over 4,700 just earlier in November. And that's the 200-day moving average sat there. It's the 50-day moving average. Sorry, it's the colours mixed up. That's the 50-day moving average. We've gone under for the first time in a month or so. The 200-day sits obviously all the way down there at around 2393 on this chart here. So a weekday earlier in the week, big sell-off obviously last Friday. Panic, unknown. We moved legs down. Interestingly, the move up has been engulfed in the negativity, and yesterday's move up was an engulfing pattern as well. Again, relatively negative setups there for. Why isn't anybody here? It's very strange for non-farm payroll day. I've done something wrong. Let me just check everything's working. It's a live video. Are we running or are we not running? Let's check my YouTube. The camera is so look, there's nobody here, which is a bit strange. I wonder if that's check that. That's a bit of a disappointment. See if we've even come up on. There we are. Right, we are actually up and running. Okay, all right. So let's wait for people to turn up. Good stuff. Okay. Right. So where was I? Equity markets here have moved down quite significantly. Big shakeout, obviously, on the last Friday. Shakeout earlier in the week. Bounced yesterday, and we're currently trading at 54864. The data. So I say data's been relatively strong. We got ISM services data later on after the jobs data. But really, it's this conundrum, isn't it? We've got jobs back and running. Just put me up here. We've got jobs back up and running, 500,000 plus. We're moving forward. We're still way below the February 2020, 3.7 million. I was reading in a Reuters report this morning, down from the peak in February 2020. So it's an awful lot of jobs. So there's a scenario. We remember we were talking during the summer that there was expectation that people might go back, particularly females might go back once the schools reopened for face-to-face teaching. That doesn't seem to have happened. Once the government federal check stopped at the end of September, that doesn't yet seem to have happened. So there's a clear issue with the participation rate. There appears to be a big spike in people going self-employed. This whole pandemic's had a major impact on people's lives and behaviour. And so people are not perhaps going back to the corporate world or those hourly paid jobs that have had to crank up wages to encourage people to get back into the jobs market. And then there's the whole issue with the equity market has been at all-time highs. The older sector of the working population perhaps just don't want to come back. There's been a spike in early retirement. Obviously, people heavily invest in stock markets in the United States, more so than most countries. And then, obviously, the housing market. We've got these house prices at record highs. So those approaching retirement or in a position to perhaps retire on ridiculous gains in some housing, perhaps, that combined with their stock market investments gives them the opportunity to do what they wanted to do for many years and just quit the jobs market and not be so dependent on it. So that's definitely had an impact. So we'll see, and where that all that ends up. Will we get back to those February 2020 jobs levels? We don't know. And then obviously the other issue remains the other side of the coin. As far as jobs, is the other side, as far as the Fed's concerned, is obviously the situation with inflation. Inflation finally this week from Chair Powell's side anyway, talking that it's not transitory. We'll have to retire the word transitory. It might be a bit more persistent, it might hang around beyond next summer and be more sticky, as many of us have been saying for a while. Things like rents and housing tends to be very sticky. With regard to inflation, rents very, very rarely go down. So the data is rolling over now. Payrolls 210,000. So it's been a big miss headline number. So let's just go back to the euro. Let's get rid of me. Let's just put up the data here. So euro, the headline euros ticked up here. We're at 113.20. So a big miss for the headline, 210,000. Where's my other calendar over here? Let's just run through the data as it's come out. So let's start at the top. So we'll come back to U6 in a minute. So the unemployment rate's fallen even further. So unemployment's down to 4.2%. The headline has missed significantly, 210,000, even the worst expectation again. Much weaker than expected. So again, the participation rate every hour's week has dropped again. Actually, it's ticked up 34.8. So those that are working more, and the participation rate has actually gone up as well, 61.8. But we are obviously in a very a strong season for jobs given the obviously the holiday season coming, but that's a big miss. 210,000. That will weigh quite significantly on the dollar, as we can see here. The euro is ticking up here. Interestingly, unemployment at U6, which is a much wider measure, is down significantly as well, 7.8% from 8.4%. That's a big drop for the U6. So this unemployment rate is falling quite significantly, 4.2% for the headline from 4.6% last time. So clearly, again, I haven't got the details here, but clearly that I would argue that that's perhaps people not coming back to the marketplace if hours worked was up. But that's a big miss for the headline, 210,000. So again, like in previous months, and obviously it may get revised higher in months to come. But last month's with a marginal tweak, it's 546,000 from 550,000. 531,000 to 546,000. So it's a minor tweak. Unemployment was tweaked down to 4.8% from 4.9%. Average, that's the earnings. Sorry, I'm reading the wrong thing. So earnings has slipped a bit, but 5% they were pretty strong. So and 4.8% still remains very strong as well. So that will weigh on the dollar. It might give equities a wee bit more relief. So let's just have a look at what's going on in the marketplace. And why is there nobody here whatsoever? Something must have gone wrong. I would guess. I don't know what's going on there. Let's have a look at that. That histogram doesn't look to have been working. Let me just go to. Why isn't that working? Can't see that on mine. Sorry, I'm just trying to figure out my face, but I'm saying sorry when nobody's here. So I'm probably just talking to myself, which is a bit of a shame. We are on YouTube, that's for sure. But is it just Christmas? Let's just see what's going on. 3 people watching, so nobody's actually said hello. Perhaps it's only me. Nobody's watching. There we go. Okay, so here we are. Dollar pressured after the numbers came in at 210,000. It was a big miss. Euro ticking up. We went to 113.35. Yen equally under one. Hang on a minute. That's the daily. That's no good, is it? We did spike to 113 again, but it's held up over there quite well. So Phil's here. So hello, Phil. Have you got anything to have a look? If you want anything to comment on, Phil, thank you for commenting. Please let me know. So 113 is holding up. Oil, how's oil reacted to this crazy? Now, we had a massive move in oil from the OPEC confirming they will extend their 400,000 barrels a day not expansion, but continue to pump 400,000. Then there's a story this morning of the Saudis in the US doing a private deal to perhaps Saudi pump more oil. So having spiked to 62.20, huge move into a bear market this week for the oil market. We're down about 18% from the highs, but we're back at $68 under that 200-day moving average there, which sits at 68.90. So I need to recoup that. That's going to move back up. If not, that's a resistance, and then perhaps we move back down again. But intraday, the 5-minute chart here for the oil market has spiked up as dollar has weakened. Struggling a bit with the audio. Okay, let's just check. Dollar going down. Yes, the dollar is going down. There's 2 Philips in, and Philip's saying he's struggling with the audio. Let me just check. It looks okay. Everything looks fine here. There's nothing being touched. Okay. Let me just reload, reset. No, it looks okay here, Philip. I don't know if it's your side, maybe why there's nobody here. It's very strange for NonFarm Payroll. Philip, sorry, I don't know if it's got any better. It's on his side. Okay, it's on your side. Okay. All right, very good. Yeah, Phil, the dollar is going down. That was a big miss. Again, markets, as we saw last week, they overreact first and ask questions later when there's a big surprise. 210,000. None of the analysts, none of the major central banks, none of the Wall Street banks were talking about anything as low as 200,000. The consensus was 550,000 new jobs. It'll be interesting to see where the jobs have been created or not created. Leisure and hospitality were supposed to be expected to have a big bounce back. Manufacturing about 45,000, and possibly some rise in government payrolls as well. But obviously, they'll struggle with that. Employees have had to be asking for golden handcuffs to keep people in jobs and golden hellos to get people into jobs, and it's continuing to tighten. There's the stuff we talked about before about people not coming back to the marketplace. But as far as that data was concerned, where's my calendar gone? As far as that data was concerned, the participation rate has ticked up a tad at 61.8, still relatively low. And earnings have mellowed off, rounded off at this 4.8%. So that would suggest that there are people coming back, but obviously clearly not the numbers in the numbers that the market was expecting. 210,000. It's not an insignificant number, but it's very much under what was expected. The Canadian numbers, for instance, also came out at the same time, and employment there has come down very significantly from 6.6% to 6%. So it's a similar story. The employment participation rate there is 65.3%, so a higher level in Canada, what it is typically in Canada. But again, it's below what was expected, around about 63. Well, it's actually stayed the same as in Canada, yeah. And the actual numbers of jobs in Canada, I can't see that there. Where's that participation rate? Productivity has actually fallen. So, very mixed numbers there for North America, but certainly the headline has been quite a significant miss for the US data there. So, let's see. Philip, I'm all good, my friend. I hope you are good as well, my friend. So, where we go. So, dollar CAD, see how that's reacted. So, again, the Canadian data interpreted as better than the US data, which is fair enough. It was that participation rate was much improved. So this general, let's go to the hourly chart. This general level moving up that we've had all week for dollar CAD. We were down here at 126 at the end of last week, and we've managed to rally higher over 128. At one point, 128.40 earlier before the data's come out, and zoom that out, and we've moved down. Obviously, both currencies impacted by the movements in the oil market as well, but this is very much NFP related. 127.65 to the downside for dollar CAD. Gold. Let's have a look at what the gold market's done, because again, it's not getting a lift at all. You can see gold remain. This is the daily on the gold market up here from 1875, middle of November, and we just weakened under the 20-day moving average at that from last. In fact, it was before the surprise shout about Omicron that come on the 22nd there, and we have moved lower ever since under the 200-day for now. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days under our 200-day moving average on the gold chart, so that's weakening again. It may get a bit of a lift from that weaker NFP, but certainly 1770 is where we've been pivoting through. 1775 is where we've been pivoting through for a little while now. If we got down to the 1 hour time frame, again, still in line with the higher daily time frame, moving lower, and 1764 here. Earlier in the week, and we've bounced up. So 1775 remains very much a pivot area. This is the 1 hour chart for the gold market. 1775 is the top of our Bollinger Band. The 200 hour sits at 1792. So again, the trend remains very much to the downside. Nasdaq's asking about Nasdaq. Nasdaq, one would have expected, got a bit of a lift on that weaker dollar. out of the back of the weaker non-farm payrolls. My Nasdaq. Actually, let me just bring up the file. Bring up the indexes. Look at them all together here for you. Mogomotsi. So let's start with the Nasdaq. It's the one you wanted to have a look at. It's a Nasdaq. Any particular time frame, Eddie? But you see, last half hour we've had a lift back over 16,000. Let's zoom that in a bit. Back over 16,000, or back to 16,000. There we are. Back to 16,000 on the weaker dollar because of the weak miss in the non-farm payroll. So very much sideways action. Let me just put in this is the 30-minute chart. So you can see I've been accruing pre-market. Let me go back to my 1 hour chart. Doesn't want to do that. Why doesn't it want to do that? Oh, what's going on today? That's like, is it because it's nearly Christmas, everybody? It's last month before Christmas. But anyway, 16,000 for the Nasdaq. I can't change the time frame for some reason. Let me find a new one. Let's file, new chart. And well, is that any better? That's a bit better, isn't it? There we are. So we're over 16 now. So the 1 hour here, Eddie, it's broken out, really. You can see, or you could argue that's broken out there at that key, 16,000 testing. Been a bit of a sideways action here on the 1 hour time frame. As our channel, bottom, top, broke out a bit there. Sort of breaking out, so a big psychological number, obviously. See how now here on the 1 hour time frame, we had that pinch in, the squeeze on the Bollinger Band, and now it's looking to break. So it looks like a relatively strong one. It'll be more emphasized here on the 30-minute, and then we go down to the 15-minute again, much more emphasized here. That break there, there's our channel from the 1 hour. So you would have been, breaking. How was that going to hold? Broke out over there. That's the key. That would have been your key entry point for 15 minutes. Broken significantly over the 200 period moving average there. So your entry down Nasdaq on that 15-minute would have been at 16,042. Bit of a retrace of 200 is your support there, a 15-minute, and we're still moving up. So some nice gains there on the Nasdaq on that 15 minutes. Esther's asking, Mr. Stewart, what's the implication of today's NFP? Well, it is much weaker than expected. Will it knock the Fed off its course? Probably not, given the significant uncertainty around Omicron. As far as the Omicron virus is concerned, there's no real data yet. Obviously, it's coming out in bits and pieces. There's some positive numbers, some positive noises, some negative noises. Positive noises saying it appears to be not as perhaps deadly, not as many hospitalizations, certainly in the key country where it was first discovered in South Africa. But the caveat on that is that most cases in South Africa were younger, healthier people were getting it. But they're only getting a very mild case. The WHO, the World Health Organization, are obviously very worried about it. It appears to be more transmittable than the previous variants. There's another argument I was reading earlier this morning about it. This could be the final variant. I find that very difficult to believe at the moment. We're only 2 years into this thing. So that's really the big uncertainty as far as markets are concerned. As far as the headline numbers, Esther, on the for the non-farm payroll, it was a big miss. That's a big surprise for the market because we're expecting about 550,000. My main economic people we follow is Action Economics. They were looking at 440,000. That was at the lower end of expectations. The lowest end of the expectations was about 306,000. I can't remember who wrote it, but it was in the 306,000 in the, I think it was the Reuters poll, not the Bloomberg poll. But it was under that, wasn't it? It was 210,000, much lower. It's Pretty weak. It's weakened the dollar. Will it knock the Fed off the course? Probably not, because the jobs are still relatively quite strong. We're in that top end. Also we missed expectations, but it could be revised. But it's a key. There's a key seasonality factor as well at this time of the year in November. We'll see what the January one looks like. But certainly the Fed have tilted more to the hawkish side. But again, the caveat that Powell mentioned earlier in the week, which didn't get much headline, was they're still data driven. When he was in his testimony to the Senate committee, they're still data driven. So if the Omicron data of proves to be hospitalization spike up, or that it spreads much more quickly, obviously the cases are already in the United States, as they are in probably most countries. We just haven't detected them yet. And obviously they can reassign their outlook, but at the moment tapering seems to be going quicker. Esther George, one of the big hawks on the Fed, also talked of faster tapering next year. Bostic yesterday, Mr. Bostic's been around sort of centrist. He's been quite dovish. He's been another one that's tilting more to the hawkish side, talking about if inflation stays at 4%. Possibly at 1 or 2 rate hikes next year. So again, this one data point isn't enough to knock them off that course at all, although it's a bit weaker. Inflation's way over their target, and jobs have been getting quite strong. Unemployment's now at a new sort of 20-odd month low at 4 point. What's my? I keep losing my economic calendar. At 4.2%. It's a huge number. I can't remember when it was last down at 4.2%, but it's very much approaching full employment when we're getting down to these levels. So that's the main impact. So as far as Eddie was concerned on the Nasdaq, this is the 15-minute. Eddie, you can see it's strong. This is your support level, my friend, here, 1630, where the 200 period moving averages for that 15-minute. But I don't know if you've got into this long, but if you've been using this particular setup strategy, which we teach in our webinars, you would have triggered long here, and you would still be long here. So that would have been your entry there. Earlier, if you'd wanted to trade this before NFP, it's a fairly brave situation. But as far as the strategy is concerned, you're being short there. That would have closed you out if you short this white candle there, and then this white positive candle here. So the 5 has crossed over the 9. The yellow line here is the 9-period EMA. This is the 5-period EMA. We triggered long here at 15,974, and you've been long all the way, and you're still long. You're trailing your stop loss up, or you're using the return to the 9-period moving average to take you out. But obviously now, you could have your stop loss just a little bit under that 200 period, I would say, waiting for a close of the candle if there. So over that 16, so that's still well bid, and you're very much in the pips there on 50-minute. I hope you got some of that, Eddie, on the move. Oh, absolutely no problem, my friend. That's what we're here for, to help everyone. So I'm just a bit disappointed about how many people are here today. Given that it's non-farm payroll, and we've got no connection on our video, our YouTube, our Facebook connection doesn't seem to have worked for some reason. Let me just go and find it. Just bear with me a second, those of you that are still here. Let me just go and find my Facebook page, see what's going on. No, there's nobody around. Oh, how strange. Perhaps you're all elsewhere. Listen to cleverer people than I am. I don't blame you. That's, I suppose, that's the way it goes. Negative. See how them. Oops. Didn't need to do that one. Let's get rid of that. It's because we're on the indexes, aren't we? So that was Eddie and the Nasdaq. So Dow. Let's have a look. That's the daily time ring. It's like a big move down. This is the daily. This is the 200-day moving average. Earlier we said about the S&P 500 breaking its 50-day. Well, the Dow, has moved down even more aggressively. We're down here 6.9% from our highs here. The Dow. There's my little Fibonacci. There we are. It's too early to put this on because we don't know. That's the bottom. Excuse me. But from the top to the current level where the 200-day moving average is, that's a huge move that's been played out. So we don't know if that's going to be the support. 34,000 is big round number. It's 200-day moving average, very significant. But it's tested it. More interestingly, really, was the fact that yesterday we actually broke under it and we closed under it, not just above it. We were actually under it. It wasn't a significant May under it, but the industrials, which were leading this churn out of text to the industrials, were getting a bit of a lead up as we rallied up here through October and November. Before we rolled over, let's put the separator on. Can't see where I am. Here, as we rolled over through September, October, obviously all the year basically it highs in November, and then we've rolled over. So it's a significant, nearly 6.9% decline. As I say, it's too early to leave that, put that Fibonacci level on there because we really don't know that is the bottom. We'll see. Actually, leave it on tentatively, see if it is, but how it plays out. But certainly, it's too early to actually do anything as far as positions are concerned on that because we're still very weak for the Dow and remains very much to the downside from this big rally up. So we're back to where we were beginning of November. Beginning of October, isn't it? Is where we are now. So those lows around about there, aren't we? So 33.875, not that far away at all. Esther, thanks for your would love to get today's analysis on gold. Well, let's have a look at gold then. See what's going on. Let's get rid of that. Let's look at. Let's go back to our default setup and our gold chart. No, perhaps there's too many on there. Don't want to do that. Oh, has it? There we are. It's gold on the 1 hour. Esther, it's this is the gold on. Let's go back to the day. We said this earlier. We've had a big rally up here, the middle of end of November here to 1875, and now we've just been short. It's rolled over, and then the big sell off for gold was on the 22nd, ahead of the news breaking of the. Sorry, let me just go there. The 22nd, that was the Monday, ahead of the news last week of the Omicron variant breaking. So it already weakened. We went down again on Friday. Didn't get a safe haven big you might have expected. So that's been weak for a while since the 22nd. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading heads. Obviously, quite volatile sessions. Really not sure what was going on here. As you can see, big wicks to the north and the south here, but really doji candles here, and not much movement in the day, but still negative. Close the day lower, close the day lower, close the day lower, significantly lower, more significantly lower. Retrace on Wednesday, down again yesterday, and bounced a wee bit today. So 1764 is coming to play again. We're pivoting through 1775, but this is the daily that remains short. The 4 hour is therefore also short, leapt down and gone sideways, capped by the 200 hour moving average now at the top of the Bollinger. So 4 hour traders, your resistance is a wee bit over the 1800. 1800 is a huge psychological level. 1803 for 4 hour trade now, but again you can see how much it's biased to the downside. Let me just put that period separators on. So well, that's a 29. That's early in the week, the 4 hour. So again, another one that's been predominantly to the downside. 1764 tested in 3 candles here, and now we're moving back down again today. So we had a bit of a lift on NFP so far. We've got the 1 hour. So we bounced off that today. We've rallied up a wee bit, but again, still biased, and then it's just sideways. So we've got a weaker dollar, and gold's not getting a lift either. Now gold's starting to turn around So gold is also biased to the downside. Esther, if you want shorter time frames, let me know, my friend, and we'll have a look at the lower time. Actually, nobody's else asking anything, so let's just do that for you now. I guess you might be lower time. So we said the daily's weak, the 4 hours weak. The 1 hour has been weak into this 1764. It's lifted a wee bit into close yesterday. It's lifted a bit today, and now we're really sort of sideways, but still biased to the underside here because that's that 20. So it's really sideways action. So as far as today's concerned, in the shorter time frames, we've had some ups and downs. So again, if you're trading the 15-minute time frame like Eddie was, your resistance sits at the 200 period. We tested it already a couple of times. Well, once today and came off it. We tested it earlier here at 1774.66 as the data came out. So it was negative, positive, and it's turning negative. So today, the low has been down. Where are we? There we are. Our low's been down here, 1766, which we tested in this last 15, this current candle. So again, another one sort of biased to the downside, but a bit range bound now. We need a breakout from there. So you have resistance on the 15-minute there at 1774, low of the day at 1766.35, and immediate, the last couple of candles low has really been around up there, 1769, so 1770, a key number as well. So a break below here, we could test down here again. This holds, we could perhaps test up to $1774. To the upside on a 15-minute chart going forward for gold, but as you can see, the MACD is just swiggling through the zero line, neither positive nor negative. Stocks are sort of edging to the negative side. RSI on the 7 counter went over, and that's edging lower, but really just sort of sideways within the overbought, oversold, immediate do nothing type zone here on the 15-minute. 5 minute might still be 5 minutes, obviously much more volatile given the non-farm payroll. But again, another one that's biased to the downside. That's the 5 minute 20 period moving average up there at 1771. That's the 200 period 5 minute moving average up there at 1771.19. So we're under that as well. So that again, it's another one that's biased to the low downside. Here we are breaking below that 1769. So that's a bit short for gold intraday. So I say let's go back. Daily remains weak. 4 hour weak as well. Tested 1764 on the end of candle. 1 hour was weak. Lift into yesterday. Week. All of Thursday, most of Wednesday. Bit of a lift this morning before non-farm payroll comes out. Had another lift at non-farm payrolls, but can't get over 1775, and now moving to the downside in the 1 hour. And those lower time frames we just had a look at. Okay, any more questions, anybody? There's nothing in there now. It's not a problem. Disappointing. Just see if I can find my. Why is it not started on Facebook? So there's nobody here from Facebook, friends. So, just. I don't know what's going on there. It's just not working. Stream feed's not. Oh well, there we go. One of those things, technology perhaps, or no more fans anymore. There we go. Weak US data as far as the headline's concerned, non-farm payroll. We've still got some significant data to come today. These services, the ISM, the Institute of Services Management services number for November is out, expected to slip from 66.7 last time to 65. That's still a robust number, but that's coming out in about an hour's time at top of the shop. In fact, hang on a minute. That is the time's all wrong. It's saying 1500. It's GMT. So yeah, it's still an hour away for that data. PMI composite from market as well. So lots of PMI data this week. Again, generally been very positive for dollar, but certainly that payroll was a big surprise, 210,000. Let's just go back to the dollar CAD, see if the CAD is held up against the dollar. Indeed, it has. This is the 1 hour time frame. So CAD's much more on the bid than the dollar, courtesy of the jobs data out of the respective countries. Dollar, sorry. Oh dear. I'm trying to find it out. Canadian data participation rate 65.3%. Unemployment much a 10% drop from 6.7% last time to 6, only a full round 6%. So obviously still higher in the United States, but very good number for Canadian people looking for jobs in Canada. And productivity has got worse, in fact, unfortunately. But the revision from last time has actually been revised from 0.6 to 0.0 for labour productivity, so it has definitely got worse according to that. But it's, as far as the market's concerned, it's Canadian dollar positive, certainly against the US dollar here, as we move back down to 127.65 from, actually got the daily time frame. It's obviously been a strong run for the US dollar against the Canadian dollars. The machinations of the oil markets played out as well over the last couple of weeks. But we're down certainly for today. But as far on an end of day basis, that just is part of the ups and downs of this movement higher. So dollar remains bid against the dollar CAD on an end of day basis. Intraday obviously has different numbers to the from the labour market numbers. So we've got a high this week at 128.40. We tested 3 or 4 times this week. But we're down all the way down now at 127.66. But still, as an end of day trader, that'd still be long. That's still holding up quite nicely. A nice move up, retrace, move up, retrace, move up, retrace, move up. Bit of a retrace, move up, and there's just another retrace in this trend higher to potentially 129. But we've already got. See how we stalled up here. This is that high that takes us back to September and August, the summer highs, and even July high as well was around this 128.40 zone. So maybe running out of steam as we get up here. As far as the MACD is concerned, that's still bid. The signal line's rolled over a wee bit these last couple of days. We've been overbought as far as the RSI is concerned. We're wiggling around as we've been going up, but down currently. So that's still looking pretty okay to me. As an end of day trader on that dollar CAD pair, I wouldn't be too worried about that. Obviously, my support, my stop loss would be around about here somewhere, which fits around about the 9-period moving average. If I've been trailing this behind me, just a wee bit below that now, so 127.35 or 30 sort of stop loss area as we've trailed this up. Thank you very much. So see if that gets tested like it has done a few times. Obviously, intraday's broken it, but closed above it, tested it. Intraday there, closed right on it on an end of day basis. Started right on it on an end of basis, but a strong day. That would have been way down here before that daily candle closed. It remains big dollar CAD, even though we're down today. Swiss franc, we're pivoting through. 92 is our big support level for Swiss franc on an end of day basis. That's our 200 period here, just below that at 91.80 this week as we've come down. That triggered short, doesn't want to break the 200 period, so tentative short here on that move lower, but big move lower obviously on the 26th. Last Friday, Monday we were down, Tuesday we were down. Didn't want to break the 200 period, so that's our. I'd like to see that under there and add to that short position, and then we go down perhaps to test this 90-80 level again, which just take us back to the beginning of November possibly. But watch that 200 period moving average, that's hanging on quite nicely there. So how can I see how many of you are still here? Let me have a look. Let's go to this. Another one. So I don't want to just be talking to myself. That's the sign of madness, isn't it? So, a bit of a mixed report, I suppose you could argue. It's still, 200,000 is not to be sniffed at, but it's the fact that it was so weak. Unemployment's very strong. Unemployment rate 4.2%. That's positive. So, the headline is what the initial reaction went on. If we look at the Swissy here, we go down to the 1 hour time frame. Dollar weakened here on the headline, but it's come back now, and it's sort of done that across most of the crosses here. Dollar index itself, again, there's the 15-minute. There's the actual number here. Went down to 95.92. So we slipped under the key 96 level. That's not on there. It's not on there. It should be on there. Let's make that. I thought I'd put that on here. Perhaps not. I'm sure I put it on here before we came out. There we go. So the 96 level is our key support, and we spiked under that on the initial reaction. But here we are, half an hour later, we're back to where we were before the data broke at 96.22 as far as dollar index is concerned. So again, the 1 hour, it's just a bit of a hiccup, really. It's sort of still edging high. If we look at the daily, though, we're still, it's been a strong November for dollar index. We rallied to 96.80 zone. We've come down the last few days, but we still remain bid to the upside. So the dollar's still in demand. That's still likely to be the case as more, we find out more about this Omicron variant. Dollar always seems to get a bit of a lift from that. So 95.72 is our support on the dollar index on an end of day basis. The big rally has cooled into the end of November. We'll see where we go. We're going to test the highs again as December unwinds, or we're going to break below this 20-day moving average here at 95. What's that one? Just put that on that chart. Or we're going to break below here and then find some sort of consolidation down here, perhaps as we did here, end of October, beginning of November. What we'll see, there's our resistance areas for dollar index 96.80 top, 95.70 floor. Euros must have come back, I would guess. There we are. Yeah, 112.88. Dollars come back, I should say, not the euro come back. So under 113 again. Again, we've been pivoting through this most of the week. And that's nothing really changed on that either. So again, euro biased a wee bit to the downside. So let me just see if there's any more questions from anybody. Anybody else in here? Did I miss anything? Philip Morgese? I didn't. No. So there's not many of you here. Esther's must have gone. Eddie's gone by the looks of things. So I'm going to call it a day. There's nobody else here. Unless there's one last thing anybody wants to look at. We looked at the markets. Markets are still 20 minutes from open. S&P futures at the moment to the upside the last few hours. And got another lift from NonFarm Payrolls coming off a wee bit. But 9,600, we still trade below. That'd be a nice break of 9,600. Here, intraday, before market start today, our resistance is there at 4,617 to 4,617 is the 200-hour moving average today. It's still a long way from where we are at the moment at 4,595. MACD sort of struggling to get over the zero line. Had a lift from non-farm payroll to the upside. So see where that one pans out. So for first level is the 96, then 9605, and then 96. I want to talk about 4600, 4605, and then 4616. Three levels to the upside from here. On an intraday basis from the S&P 500. To the bottom, to the downside, our 20-hour moving average sits at 4,573. Then we got a 50 period round here at 4,565. And then the low, so far the low today has been down there below 4,550. So that's a key support area. If we got the daily, see why that's such a key level That comes from a previous decline we had here from September into October. That's the top of that. That's a support. We've been under that, and that's where that 200-day, the 50-day moving averages as well. So 4550 key level for S&P 500. Right, so there's no more questions. Nobody else here. I'm going to call it a day. So thank you for your time. Those of you that are here, there's not many people here today. And so let me just hide that. There we are. And we'll see you all again on Monday. Quite a week next week, but it's topped by the central banks, Bank of Canada and the RBA, the Reserve Bank of Australia. RBA under perhaps more pressure than the Bank of Canada. Bank of Canada already moved quite aggressively, cut its QE earlier, tapered its QE last time, so no surprises from the Bank of Canada. Perhaps more news from Australia. Both, I can't remember actually. Yeah, Canada has already registered earlier in the week about cases of Omicron. It's inevitable. Australia did yesterday. Obviously, Australia's been their approach. They were starting to open up. That's obviously now being questioned. But it's all working in the dark a wee bit at the moment, based on previous experience with previous variants. So they've acted much more quickly this time, you could argue, governments. But there's not significant scientific data as far as the number of cases, this transmissibility, and no number of people is put in hospital, and unfortunately, number of deaths either. So, but it's still serious. It's another winter of discontent. 2 years now. This has been with us, and it's far from over yet. So vaccinations are being pushed. Obviously, boosters are being pushed in the developed markets. Unfortunately, still very, very low availability of vaccines and take-up of vaccines as well in some markets, and some less developed and low-income countries in vaccination rates remain stubbornly in single digits, unfortunately. But there we go. So that's all for today. Non-farm payroll. Quick recap. Headline was 210,000, a big surprise to the downside when market was expecting 550,000. Unemployment, headline unemployment down to 4.2%, a new 2-year plus low for that. The wider U6 unemployment also down quite significantly, 7.8%. Participation rate had ticked up. Earnings is still heavy at 4.8% on a year-by-year basis, come off that 5% level. So overall, quite a mixed number, but the headline was will be what grabs the headlines, as it was such a significant beat. It's not really going to push the Fed off its course. Tapering is coming. Their meeting is the week after next, 15th and 16th, I think it is, Tuesday and Wednesday, where they will announce probably a faster taper. It might not take them back to just the 15 billion they've been talking about when they first mentioned it. But I doubt it, to be honest. But that's just my views on things. So take care, everyone. Have a great weekend. Stay safe, and we'll see you all again on Monday. So all the best, everyone. Take care. Bye-bye.